Pass our morning call. Hope you're having a good morning. For starters, the gift Nifty was suggesting some bit of cooling off after yesterday's good close to trade. Maybe a 50-point pullback is what we're bracing ourselves for. But Siddhartha Khemka, Head Retail Research, Motilal Oswal Financial Services, joins us on the show. Hi, Sid. Good morning and good to see you in. Well, a lot of stocks to discuss, but the one that I'm tracking closely is Tata Steel. Those numbers look very, very good. The India business, it rocked. The question is, how much of it is sustainable? At around 135 rupees, what's your approach?
Yeah, very good morning, Nigel. Good to be on your show. So if you look at overall metals, the cycle has not been that positive. And within the overall metal space, again, the steel segment, the ferrous, was something which was kind of lagging because of the pricing pressure. But having said that, the domestic side was very strong, and that is a very encouraging thing for other domestic focused ferrous companies, the likes of SAIL, the likes of Jindal Steel and JSW Steel. The global business continues to struggle, where the bigger struggle is for Tata Steel, the European business, and hence I see that yes, the standalone numbers reflect the good business demand, and the pricing has been also good. So average selling price has been, if you can say, flattish on a Q-on-Q basis. So which is a good thing because of the infrastructure demand as well as the housing real estate sector, which has been doing well. The steel sector has been doing well. Auto is another space which has kind of seen strong growth, and that is leading to a good demand. The domestic production has been up 8% Y-on-Y and plus 4% Q-on-Q. It posted the best ever Q3 sales at 4.9 million ton for the quarter. It was in line with our expectation. Now, having said that, I think if you look at the overall picture where the consolidated thing also comes in, the performance is not that great. So for the 9 months on a consolidated basis, the revenue is down about 5%. The PAT is down almost 69% for the 9 months. So that kind of shows the full picture for Tata Steel. So at current juncture, we have a neutral view on Tata Steel. We believe some of the other more domestic focused steel players can be a better bet at the current juncture. So we have a positive view on something like a JSW Steel and a Jindal Steel and Power within the overall metal space.
Okay. Siddharth, hi, good morning. Bajaj Auto reported a very good set of numbers, but the stock has also rallied quite a bit. Do you think there's more upsides after what you've seen with the earnings?
Yeah, good morning, Sonia. So yeah, I think Bajaj, very good set of numbers. Some of that has already been factored in the market. So for us, we saw the numbers were in line with our expectations. The overall domestic two-wheeler industry volumes are expected to grow in the range of 8 to 10% in the coming months. For Bajaj Auto, it reported its highest ever EBITDA margin of 20% plus, which is a improvement of 100 basis points on a Y-on-Y basis. It was supported by strong, healthy volume growth, better realization and cost control. So I think having said that, we have seen the overall two-wheeler space in the domestic market seeing a strong recovery, and on back of it, we saw strong performance from both Hero, Bajaj Auto as well as TVS Motors. Having said that, yes, again, I think the gains, we expect Bajaj Auto to benefit from market share gains in the longer term, led by the premiumization trend, the opportunities in exports which are just improving, and the scooter segment where the penetration through the EVs is what Bajaj Auto is looking at, which would be a larger portion of growth opportunity for Bajaj. The stock is currently trading at about 26 times FY24, that is current financial year, and 23 times FY25 estimate. So which we believe leaves little room for upside. Currently factoring in bulk of the upside. So we currently have a neutral rating. We have a target price of 6,775, and we are valuing it at about, say, 22 times on a 1 year forward basis.
All right. Stay with us, Siddharth. We'll come back to you with more in just a bit from now. But Cold Tip 18. Siddhartha Khemka is still with us. Siddharth, HDFC Bank saw a bit of a bounce. Briefly, is a trading rally possible here? To begin with, at least, before it develops into something bigger?
Yeah, Prashant. So I think what the management has acknowledged and what we're hearing that they're looking to sell off some of the assets to kind of take away the to improve the cost ratio as well as the credit to deposit ratio. These are the two bigger concerns that the market had post the results. A, on the cost side, which has gone up, impacting the margins, and B, on the credit to deposit ratio, where the growth could be limited because of the pressure from the deposits. If the deposit doesn't grow that strong, and you look at the some of the other banks as well, there is a huge pressure on most of the banks to improve the deposits so that they can grow the business in the rate at which the market is expecting or the management wants. So I think these are the two factors which would drive the stock sentiments in the near term. The news flows that come in is definitely positive, can look at a short-term bounce, but from a longer-term perspective, at least the next 1 or 2 quarters, the results would determine, at least on these two parameters, where if things have started looking better, one can then take a constructive view.
All right. Siddharth, just stay on. We have about 15 minutes left for the pre-opening rates to kick. Welcome back. This is Open Exchange. You're watching us live from the CNBC-TV18 Motilal Oswal studio. We're heading into a market opening, which looks like it could be a bit volatile today. Siddhartha Khemka is still with us. Let's get some stock talk going. Siddhartha, I wanted your thoughts on some of the good numbers that came through this time. Pidilite, for example, right? Double-digit volume growth is what we saw. Growth overall has been good in the FMCG space, not as bad as what we saw in the preceding quarters. What would your pick of the pack be here?
Yeah, so Sonia, I think there was some concern specifically with regards to the rural demand uptake, and that is something that is continuing. So if you look at bulk of the growth that has been coming for companies has been largely been driven from the urban space. And in that space, we like something like a Tata Consumer or a Godrej Consumer, where we believe that specifically for if you look at Tata Consumer, the growth is more driven from the urban, where some of its segments are doing much better. And we believe that growth could continue given and valuations are also so much comfortable for that space. And apart from the consumer staples, if you look at ITC, is something that has been continuously doing well, which has been our top pick within the consumer space, driven by the growth in the cigarette business cash flows, as well as the margin improvement in the FMCG space, which is much better or higher than some of the other consumer names. So I think within the overall consumer space, we would prefer something like an ITC, where we have a buy rating and a target of 535, followed by Tata Consumer again with a buy rating and a target price of 1350.
Siddharth, the one space which really has been doing well is the metals and mining and PSU space, right? Long list of winners. Again, yesterday, by the way, the index with the published index was up another 3%. IRFC, REC was up 7%, NHPC, PFC, IDBI, NBCC, HUDCO, SJVN, NALCO, IFC. I can go on, and these are 10 to 20% movers, by the way, yesterday. Anything which Motilal is pushing?
Yeah, Prashant, I think the PSU space is you can say, the darling of the market, and rightly so. Some of the segments, if you look at, are in the core industrial space, which is doing very well. And the biggest comfort has been valuations which were at very low valuations, and hence a lot of interest from the market side. So some of the segments, if you look at from the oil and gas space, we continue to like something like an Oil India, ONGC, some of the oil marketing companies, Indian Oil Corporation. We believe this segment could continue to do well. Within the power sector, we like Coal India, which is among our preferred picks. We believe the power demand continues to do well, and Coal India has kind of increased its the production offtake, the challenges that they faced in terms of excavation and distribution, that is the logistics, that has improved a lot, and that is leading to a volume growth. Again, despite the run-up, there is a dividend yield comfort of 4 to 5%. Valuations are comfortable. So Coal India is another stock within the PSU pack that we like.
Okay, stay on. There's one stock that has had a really great